Well, first, Brad, I appreciate you doing this. It's kind of cool that we were able to talk a little bit yesterday. So thanks for coming and doing it.
Yeah, definitely.
Now, like I told some guys, there's a link that I gave them, that 25-minute interview you did with CME, and it talked about your background. When did you start at ITG, Brad?
I, right out of college, 2002, 2003. So I think it's early 2003.
We were
But
at the
something like
Northfield
that.
office, right?
Yeah.
All right.
Yep.
All right. So then about a year later, we moved. When did we move there? Late '03, I think it was. November of '03. You remember?
Yeah. Maybe I was there for a year and a half. Something like that.
All right. So then we move into this bigger office, nicer office. And did Woj hire you? Did you do the interview process through
Nope.
him?
I just interviewed with Dave Ellis, who was the owner.
And you went through a job fair. Is that how you found about, or they were at a
Yep.
job fair you found?
Yep. University of Wisconsin. I went to. Grew up in northern Wisconsin, and I knew I wanted to trade in there. There was a few trading groups at the career fair they held, so that's how I think I interviewed with somebody else first, and I was really interested in trading, and I had I'd done a lot of work on my own in college and high school, trying to learn as much as I could, and one group was really turned off by me because they thought, well, you have too many ideas in your head. And the way I looked at it was, well, I'm at a young age and I'm really interested, so that should be a good thing. But they thought it was a bad thing because apparently I've been doing too much work on my own. So I went to the other place, ITG, got hired, and that was kind of the end of that. So
Yeah.
that's how it started.
That was another prop group that thought you had too many ideas?
Yeah. They're like, they wanted you. I said, well, I didn't think ambition and a desire to do something at a young age was necessarily a bad thing, but apparently they looked at it as they want you to have a clean head.
Yeah.
So, yeah, whatever.
It was their loss. Was Dave at those job fairs? I remember he
He
was
was.
doing them. He was?
He,
Okay.
he was back. Dave and Dante.
Yeah. I remember when they were talking about doing it. So I started in 2000, and my interview was with, when I tell the story, it was Dante and then Dave. But then what happened was, and this might have been right before you or after you, but he would hire classes of 6, 8 people. Were you hired with like 5, 6, 7 other guys?
Correct.
Yeah, so he would have Woj. These guys are familiar with Woj. He's come in a couple times and a few
Okay.
times in this group, so they're familiar with him. And they put him on point to hire some guys, or at least in the process. But so he kind of hired, I don't know, groups of people when they started doing that back in Northfield, and then I don't know what had happened after that. But so and he didn't have a skill to interview people. It was just he developed it about what he's looking for, and he honed in on a skill on what. Because it's as you know, it's not like people realize what we're doing, right? Did you have any idea what we were doing?
Not really. I mean, I kind of asked some questions to figure out, a little bit more about it, but I didn't know. I just knew I wanted to get involved in trading, and I didn't know exactly how close I could get to what I wanted to do. But I figured I'd get in somewhere, I figure it out, and worst case scenario, I have to move somewhere else.
Did they bring you in, and Brian was your teacher? Did they do classes like that when you first started?
Danny, Sheck, Brian, there's a few guys who were teachers. Yeah.
Yeah.
Yeah, we did classes. Yep.
Yeah, I didn't know Danny would do that. Would do that also. I know Brian did, but that was even years later. So you started only 2 years after me, roughly, um, and it was what Woj would say is that guys have no idea. You could bring a guy in an interview, and he thought you needed to understand PE ratios, right, and earnings per share, financial
Yeah.
advisory stuff, and so you have to get through that before you could find whether they're interested still. So that's kind of like the thought process. So you're driven. You go to college. You want to trade. You get this break at a from a job fair. They bring you in. How long did it take you to start? Where you figure like, I think I could do this.
Well, I kind of never had a plan B. It was always just plan A and then more plan A. So it was kind of like make this work. And I was young. I wasn't married. I didn't have any big, things to worry about. So I think that helped at the time. And then I went in and I went after it. I recorded my screen. I rewatched all the big moves. I studied people who were doing well. I asked them to look over their trades. I learned about technical patterns, mostly because I want to know when they aren't working as much as when they are working. I learned about whatever fundamentals I could about the index futures, like what numbers move them, did they pay attention to bonds and currencies and all that stuff. And then I learned about trading Europe and how that affects the U.S. And that was kind of like all the things I did, and talked to a lot of people, and kind of eventually you have too much on your mind, but then you filter it down into what's important for you, and then you have a system, and you kind of start to build from there.
How long did it take you to say to yourself, though, so you already knew you could do it, how long did it take you to start making money?
I forgot to answer the question.
That's all right.
6 months. 6 months.
Well, that's good. That's about what they want, right? 6, 8 months.
Yeah, but I mean, to be fair to people now too, I do feel like it's a little. I feel like it's a little tougher when you're not in an environment physically immersed with. Like, it was a unique environment, and I just went at it like constantly all day and all night, and so that was kind of like a fortunate scenario, and stuff like that. And I think if it takes 18 months or 2 years, I don't think that that's necessarily wrong. I think that that could be more normal sometimes. Not because I'm so great 6 months, that's not what I'm saying at all. I'm just saying that I think that looking at it now, if I started now, it might take me a couple years.
Well, that's why we put this program together. Is we got this virtual office to create as much of that physical immersion as possible. Because when you're alone, you not only don't have the resources, you don't have the accountability either. And you start doing something and you just get taken in the wrong direction. But no, I always say that's my story. I was losing money if I didn't get hired by a firm and around other guys that were doing it, I wouldn't have done it. I wouldn't have turned the corner. Couldn't have done it on my own, I guess, is the thing that we're both saying. You had Brad and I talked a little bit yesterday, and you had a kind of a good way of putting it. We talked about fundamentals and technicals and how people kind of start there, and we make fun of technicals if that's the only thing you're using and you think that that's going to work. Elaborate on that.
Well, yeah, I think that people make fun of either thing. Like, you can make fun of the value guy in the stock market who buys the stock because it's a good value, and then the stuff goes 2 years. It keeps getting to be a better value and a better value, and eventually the market turns, and that guy, you can say, should be using technicals to figure out when does the value intersect with proper technicals. That's when you want to buy. And then he might still make money, though, but he's holding a lot of losers against him. And then you look at the technical guy and you say, well, you have this nice technical pattern, but imagine if that pattern was bolstered by fundamentals. And like the things that what are fundamentals if you're day trading futures? Well, an example would be, let's just say we have the exact same, let's say we have two charts, chart A and chart B. Chart A has a little like inverse head and shoulders, kind of looks bullish, like the opposite of a head and shoulders on the bottom. Technical trader loves that, wants to buy that when it pulls back. Okay, great. Chart B has the exact same chart. However, it has a data point that came out a couple hours ago, and the market was really, the number was really negative for the market, and the market is now forming this bullish pattern in the face of a negative number. Now, on chart B, I have the same chart, but I feel like I have a fundamental reason why people might be stuck selling it. And the guy on chart A who thinks fundamentals are useless doesn't look at it that way. So now I'm looking at two things, not just one. So I trade it bigger. Maybe I hold it longer. Maybe I have more conviction. Whatever you want to do with it, I feel like it's always the more things you can put together, the better understanding you have what everyone else is doing and looking at, the better odds of success. So that's kind of how I look at that whole debate between those things. I like both.
Yeah, and it's a probability thing. It's just you're stacking probabilities, and you use the phrase that I've used all the time with with guys in the group is stuck selling, because markets aren't going to rally unless people are stuck short, and that's what creates that pop. And the pattern, you got to know that dynamic of why that pattern would work. You got to have enough stuck shorts in order for that bullish pattern to be bullish, and you still got to find a place to buy it. You still got to be good at getting out, and you can still screw it up, and all those things. So it's like you mentioned in the conversation about there's no magic page in a book, right? That's going to make you a millionaire.
Right. I mean, I've talked to a lot of guys in the past, and sometimes I come across people who and this isn't a critical comment, this is just an observation that people who are new to trading especially, and a lot of really hardworking people, smart people, what they do is they want to go towards something that's very structured that they can kind of study at night, and learn and then become successful. So you look at things like market profile, not that it's wrong or bad, but technical patterns in a book, head and shoulders, trend lines, things that are easy to study and understand. And then they go into the market and they use those things, and then when they are frustrated with it, it's, well, do these things not work? Or, well, I don't think it's that simple. It's more of like, if you think about, we had the analogy yesterday of an athlete. So if you want to be a well-rounded athlete, you're flexible. Maybe you do yoga. You are a strength trainer. You can lift your body weight, pull-ups, push-ups. You can run a mile or two at a good pace. You could sprint if you had to. That's an athlete. It's not just someone who's really bulky who can't even turn their head to the side without pulling their neck out because they've just been pumping bicep curls and pounding protein powder all day. So that's not really the same. So if you look at back to the trading analogy, you look at someone who's just looking in a vacuum at like a few technical things. It's not that easy. Algorithms can re-engineer that, and people know that's too simple. It's too simplistic. If you could read it in a book and walk away and be a millionaire, everybody would do this job. So you have to understand that it's not that easy. You have to be an independent thinker and have more things than just, you can use those tools in conjunction with something else, but by themselves, I really don't find them overly useful.
You said something that was on an interview, Brad, that I thought was helpful. I mean, to someone, and here's the thing about guys who trade professionally and do it, have done it, is they're not ignorant to help. To think that, oh, I could do it, no one could help me, is the absolute opposite of what this job is. You never stop learning. You'd advocate that, right? You agree with that? You never stop.
Yeah, that's like a huge part of my personality, and in general why I was attracted to trading is I've always been a lifelong learner in everything I do. I'm always trying to, get up earlier in the morning, better structure my routine, like jump into your fears, whatever you're scared of, dive into it head first and get past those barriers and keep pushing yourself. And I think in trading, a lot of times you have to be extremely open-minded and flexible. A lot of times an experienced trader will learn a lot from a new trader, even though he's made more money, because the new trader doesn't know what happened in the past, doesn't understand how it was 5 years ago. So he has a strategy that's working. And the experienced trader can learn, if he's open-minded, to try something different. And that people always say to me, well, I just want to turn the corner, or I just want to become consistent. And while that happens, you never really do that, meaning that what happens is you go on a good run, and then you get struggle again. The market changes, and now you're inconsistent again, and it's back to readapting, and then you go on a run again. And a lot of times it's not just this, I'm always consistent because I'm a professional. It doesn't really work that way. But the way it can work is that your up cycles are bigger and better, and your down cycles are you cut your size back, and you understand the process, and you learn from them, and you keep accumulating knowledge along the way, and you just kind of stretch the good parts and shrink the bad parts. But the bad parts still come. I mean, you're never going to, everyone struggles and has, I've had 6-month periods multiple times in my career where I've made no money, or where I've lost money, where I've struggled. So that's just part of the business. And everyone goes through that. And you're kidding yourself if you think that professionals don't go through that.
Yeah, it's not green days, green weeks, green months, every day, every week. And then you start getting into, can I do this? What did I lose? What did I, is it gone? And something turns, clicks, and you go back on a run. But the way you said it was really well said. Your up cycles are, try to stretch your up cycles and shrink your down cycles. It's like you're darker green than you are red when you're running, but you never truly just, oh, I got it, life is good, put it in neutral. And that's any business that's lucrative.
Like any business, right? I mean, think about like a football team. The Super Bowl just ended. Think about a team who has who has a system or an offense that's working really well. Well, if people watch film, they figure it out, and you better adapt, or else it's not going to work anymore. Every game is it's a chess match, and if you're making money in the market for 3 to 6 months doing something similar every day, eventually it's going to go away, and you're going to need to. It doesn't mean you change your philosophy or like your basics, like your risk management, the basic way you look at the market, what you like to trade, you can keep that, but I think that things are different. Like it's become, sometimes the market is very technical based, but it doesn't make any sense fundamentally. It's just flying all over. I feel like right now it's kind of like that. It's technical. There's not a lot of U.S. fundamentals. It's this China stuff, and other times it's different, where it's very much like based on the U.S. and you have numbers and data that are moving us, and stories about the Fed, and that comes and goes. And you got to learn to kind of move through each environment and know if you're stronger in one, you get more aggressive, and when you're weaker in one, you stand back and be more protective.
And if you're not around other people, you're not going to be privy to this, like the slap in the face. It's just like, well, of course that's not working. And then they go into the reason why it's not working, and you stop slamming your head against the wall because you're around the right group. I'll give you an example. Woj was like 6 months ago or whatever. The bond and ES was a great opposite relationship that was working, and it wasn't working. And I'm beating my head, and I'm like, what's changed? And he says, listen, it's the 2-year that's leading the long end. He says if the 2-year is on its lows and the bonds are on their highs, bonds are going to get weak, and you got to wait for that to turn before you start beating your head. If the 2s are in the middle, I don't know what's going to happen. But it was just like, pay attention to the short end. Now that didn't work forever, but guess what it did? I stopped beating my head up trying to press the any kind of S&P trade with a move uptick, downtick in the bonds, right? And it turned from not only probably stop losing money, but maybe making money. But those are the things that you get when you're around people who know what to say, know what to do, and caught something a little quicker than you. And then other times, Brad, right, you'll be the guy to tell someone. It's just we're not egomaniacs. We're open-minded to what other people have to say, right? You've been helped in your career by the littlest thing someone has said, right?
Yeah, I mean, a lot of times you hear the same thing over and over again, but for whatever reason, someone says it and it sticks and it really sinks in. And that's like, how that works for everybody a little differently. That's why a lot of times I'll read, you read a lot of the same books, you talk about the same things, but sometimes it just sits with you. So I think that's why you keep learning, you keep pressing forward. But there's also a time, I think, that you need to shut everything down and really be in your own world and focus on what you're doing. So it's like getting a group around you that you really like. You're used to the group, so you know if someone's really bullish in the group, you know them well enough to understand why and what they're looking at, where it doesn't influence you, but you can take the information properly. Versus like if you're only in the group once in a while, you might get really excited with the group. So I think with groups, that's really a good thing, and you have to learn over time just how to manage like the information from the group. And you do that; it just takes time, but then you do it.
That's a really great point. I mean that it's about relationships. You got to know who you're in with, and well, this guy is when he's bullish. He's all whatever. What you just said was, I think, the best way to utilize community. You got to manage the group for yourself. And not get overly influenced. Let it fill the gaps, but understand why they're saying what they're saying. It just brought your attention to it. So that was well put. There was a thing that you said, I don't know when it was, Brad, but it stuck with me because I got sick of plotting my trades because it was boring. I mean, it was like plot, and I'm like, well, what am I seeing here? What am I doing here? And we get focused on the red. How can I remove the red? And then you had come and talked about look at what you miss instead of what you did wrong. You remember saying that some time ago?
Yeah. I like a lot of times when I'm plotting my stuff. I plot it every day for 4 or 5 years. I don't do it quite as much anymore, and I should. I just got a little lazy with it, but I did it religiously, when I was starting. But it is a good thing to do as much as you can stand to do it. And I use the way I do it is I use like a blue pen for buy and a red pen for sell. And the way I plot is I'll put a dot and a circle for an entry, and then just a regular dot for an exit. So a buy would be a blue dot with a circle around it, and then the exit would be a red dot. And for a short, it'd be the opposite. It'd be a red dot with a circle. So that being said, a lot of times, like when I'm struggling, I'll say, geez, the market's been really tough lately. I don't understand what's going on. And then I'll plot my trades and I'm thinking, you idiot. You're bullish, you're buying it in the middle of the bar, you're selling the bottom of the bar, you're waiting for confirmation to buy the top. I mean, and you plot that and you see that, and it really sinks in that you're your own worst enemy. And the next day, what I say to myself is, okay, When you apply, like before you do this trade today, two questions. Number one, if you do it 1,000 times, are you going to make money? If the answer is no, don't do it. Number two is, are you going to be proud of these plots at the end of the day? You're going to look back and say, hey, this is good. I was bullish and I was buying at a nice area where I knew where I was wrong pretty quickly. I wasn't fading. There was a failed low before, whatever you're looking at, and you're proud of that versus just losing your mind and just spraying crap all over on the chart because you don't want to miss the move, which we all have done. So that's how I look at it, and that's how it helped me.
And so when you go back, do you go back and look at what you missed and say, what did I miss on this breakout? Or you just get this nice move, this nice rally or a break, whether you were long to break or short to break. Let's just say you missed it. Do you look at what you missed? It was a setup you liked and you missed it when you're not trading well?
When I was new and I first started, I used to study all the big moves because I just didn't have an idea of like why they ever happened. And I think that that's a really good point that you're saying I haven't done that as much lately, and I think that that's a good thing to keep doing is to look at it and say, what caused this? If you really want to dig into it, did the bonds lead us? Was it a certain stock that's been in the news that had earnings? Was it the NASDAQ that's been strong all day and eventually we decided to follow? Was it oil? And how did I miss this? And I think when you're plotting your stuff, it's important too to not, when you blow up in the middle of a range and start doing a bunch of dumb stuff, when you plot every one of those trades and you spend 2 days just doing that, it really beats you up mentally. I think sometimes you kind of know when you drink that poison in the middle of the range, you just keep drinking it the rest of the day, and you need to be aware of that. But you don't want to grind yourself into the ground when you're already working really hard and just overdo it in the evenings with staring at a bunch of bad plots in the middle of the range. I don't think you'll learn that way. I think you'll learn more by looking at like what you did well or what you could have done well, but you just got stupid and didn't wait for. I think like reinforcing the positive things you want to do is a way that I believe works better.
No, I agree. You also talked about the when you're trading like crap and there's opportunity and you're missing it, and you want to blame the market, but you see other people might be making money, and it's not an opportunistic market. Maybe something you're missing, something, whatever. You had said just pull back and focus on one setup that you like, and you're not to trade it till you recognize it, right?
Yeah.
And not miss it. Could you elaborate on that?
Yeah, I think that's how I started. So like here's an idea. An example of the first trade I did is we had to come up with some trades for a class, and the first thing I did was everybody loved Fibonacci ratios, so I would draw Fibonacci ratios, like the 38.2 and the 50% would line up at the same area on a chart, and the market would bounce. It's a downtrend. Let's say the market goes up and it bounces, it comes off. Okay, I can understand that. I see why. Second time it comes up, it bounces again. Okay, I understand at least why it's bouncing because I read these technical books. I know what people are looking at. But then it tries to come off and it kind of can't, and it sits there. And then the third time through, I buy it and I make money on it. And that was my one little trade, was screwing people who were using the Fibonacci's. And I just would only do that trade, and it would show up like, I don't know, once or twice a day sometimes. Sometimes it would show up not that much. But then I started adding more trades, and I had success doing that. And I was very specific in what I was doing. Then throughout my career, I got into more stuff and less stuff and went back and forth. But I think that is a really good strategy when you're struggling because it keeps it very contained and it slows you down, it makes you more mechanical, and you can explain to anybody, well, I bought because of this, and when it didn't work, I knew I was wrong, so I got out here. Versus, just rambling about stuff that is valid on a daily chart but not on a 2-minute chart, and you're buying it and selling it, and you're all, we've all been there, and that's not really what's going to help. So I think being very focused, very micro on your time frame can be useful, like very specific in what you're doing, and you're almost a specialist of a few things, and I think that's even more important when you're struggling.
Yeah, that's good. A specialist on being very specific. And I'll explain it like, can you explain it to someone that has no idea about trading, about what you did, and they could kind of sort of get it? Because if not, then it's not very structured or simple. They don't have to understand the recognition of it. But this is why I bought it. This is where I was going to get out for a winner or a loser. And if they could get it, like, okay, I could see that third time through idea. well, then it's structured and it makes sense. But if you're rambling, to use your word, well, then you're rambling in your trades. There's nothing to it. I'd like to kind of segue this into, you traded this morning, Brad.
Yep.
Would you care to talk about your thought process through the morning?
No, that's fine. Yeah, I mostly was focused on the euro and the S&Ps.
Wait, before you do that, I'm going to show my chart and just pull
Mm-hmm.
up a euro and an S&P. And I don't know, could you see my screen as you're talking?
I can see you moving a mouse. I see it says crop trader on the screen.
All right, hold on, let me bring my charts up. And
Okay.
I could set them to your periodicity. What periodicity do you use? 2 minutes, 5 minutes, or?
Oh, I use I have like 1, 5, and 60. I'm looking at a 1 minute, I guess, but I don't trade that often, even though it's a short chart, you know. But I had a 1, 5, and 60 for each instrument is what I was looking at, but I can talk through whatever you put up.
Here, I'll put up. Well, I've got a couple things. This is a 4 PNF for the ES. This is just a 6 PNF of the ES. But then I got a correlation chart here I'll throw up. It's got the euro on the top. It's got the ES in the middle and the yen at the bottom.
Okay.
It's just a line chart every 30 seconds, so it's pretty short term. I could just make. Does that work?
Yeah. So, you want me to just start talking about it?
Yeah, like you
Okay.
got up and thought whatever you thought.
When I came in this morning, as busy as it was, I saw very little to do. I felt like the 10-year was kind of stuck in an area where I didn't know what I wanted to do with it. I feel like the S&Ps this was before that massive rally. They were just kind of in free fall mode, and I didn't really know. I didn't see anything setting up. And then the one thing I saw setting up was the euro. I felt like lately there's been a lot of talk of more stimulus, and the thing's been going up, kind of surprising people. And on a daily chart, the euro broke out of a consolidation, and technically there's just every reason I think it should get up to 115 or 116. So it's kind of like right in the middle of that march right now. So I thought if there's one thing I want to do today, it's if I'm good on pullbacks, I want to get a chance to buy the euro. So I just got a very small trade off. I'm actually still in a little tiny bit of it. Yeah, buying the euro around like right before 9:30 Central Time.
All right, and this pull back to like 112.80.
Yeah, just kind of buying them in there. Just looking at it made a little double bottom down there. I kind of wanted to buy it a little lower, but then it set up that little consolidation, and I knew we had those highs on the left side there, those two tops from earlier in the day. But I'm mostly looking at this because I see going into the year. So I'm a big fan of like using popular media and sometimes news and events kind of help me with when people are doing the wrong thing or stuck. One of the big themes this year, one of the big surprises was the weaker dollar. Like that's kind of it's been going on for a while now, but that was not really baked in 2-3 months ago that we were going to have a weaker dollar. And I think that continues to play out. And in Europe, they were supposed to go hard and heavy with their stimulus, and now they're starting to kind of waffle a little bit because the Germans are putting up a fight. And you can't necessarily trade on a short-term chart with this, but when you're aware of it and it starts to break out, I think that those trends tend to really persist, especially in currencies. So I'm bullish on this thing until it gets back. If you have a longer-term euro chart, you can kind of see what I'm looking at. I don't know if you have something like that, like a daily.
Yeah, I got. Well, hold on. Let me get rid of this pen over here. You want me to go to a daily?
Yeah, go to a daily on the euro.
All right. There we go.
Okay. So you guys can see the big move off the lows from like 10. That was the press conference ECB when they dropped the ball and didn't do the stimulus they were supposed to. And we sat in this massive consolidation. Right? This massive bullish consolidation. And now there's a lot of bearish news baked into this product and a lot of bearish expectations. And also the big consensus trade was strong dollar, U.S. is raising rates. So you got a lot of stuff fundamentally saying it should go down. And then when we break out of this thing, through 110 there, nice round number, we come back, we go up through 110 on the right side, like February 8th or so, and then we come back down a couple of days later and we retest is it 111? I think it's 111.
Yeah,
Sorry.
111 even.
We retest 111. Yep, you retest it. And then we come back up. I feel like this is just like an air pocket in here. Like it needs to get up and at least get up into the 114s. So we're stuck in this area. I looked to the left in November and I see that big red bar that went down from like 113 to 111. Yeah, and I'm looking in here in the short term, and when I'm looking to get long. Every day I come in, I'm looking to buy this product until something drastically changes, because especially after that retest, it breaks out, it retests 111 and it holds, and there's a lot of kind of bearish feeling in the product. That makes me feel like people are stuck in this thing on a bigger time frame, and it should definitely make us move up. And if you just measure this like technically from the bottom at 106, we'll call it 106, up to like 110, conservatively that's 400 points. When we break out of this range, we should conservatively move 400 more points, which is, yeah. So I'm today sitting in those ones, I see it strong all day. I'm just kind of looking for, this is when I use stuff like moving averages, Fibonacci's, pullbacks, and I look to get on those areas and just get long in more of a trend following mode, which some days I wouldn't use that strategy at all, but it kind of lines up in the short term and the long term. So that's one little trade I did today. And then the other trade I did was, and so I used a lot of different time frames and some kind of bigger picture thoughts, but it was more of just very much of a short-term trade. But yet this other stuff was part of my analysis, I guess, if that makes sense.
No, it does. And it's like you've seen that was a setup for continuation. So Brad's always been, what would you say your average hold time is if you just go back on, whatever? It's just, you like to hold stuff for...
Yeah, maybe like, I hold some stuff for 2 hours, but a lot of times it's like 15 to 30 minutes.
Well, that's your average hold time if you take your whole career?
5. Yeah, I'm guessing 15 minutes, because sometimes I'm in stuff, if I get a real nice piece out of something, I might get out of it in a minute and a half, I've done that before, like everybody has, but a lot of times I'm trying to look for a little bit bigger move if I can. Like I might put on some, get out of half, and then try to sit with some.
What Brad is really good at is, especially if it's going your way, is not getting too anxious to get out. It's still playing out. There's still more room. And so you've been really good at battling that anxiety, not holding on to losers, but you got your area. If you're out, you're out. If it violates your area, you're out. Nobody likes to be comfortable with it against you, but you're good at being comfortable when it's your way. Would you agree with that?
Yeah, all the big money I've made has been when I'm aggressively going with the trend. It's my way. I'm sitting with it. I'm buying more on pullbacks. I'm getting out, buying more on pullbacks, maybe buying a little at the high, but then quickly getting out if it doesn't work and just like nursing that position. I want to have a strong idea. That's how I've always traded.
Yeah, you got a strong bullish idea and you're playing it from the long side. And those are your entries.
I try not to get caught up like stealing money on the short side and getting back to the long side, and that gets me in trouble.
Yeah, yeah, because you say like, man, if I wasn't bullish, I'd be short here. But
yeah, I'm bullish, but these are going to come off a little bit first, so I'll just get short, and then all of a sudden, I got the thing shoved down my trousers, and I'm short, and I want to be long, and I'm just not happy.
And if you weren't short, you would be long. So you're buying to cover instead of buying to get long. So
that'll put you in a bad mood pretty fast. You lose money, and you want nothing to do but be long, and you're short.
Yeah, and then people don't realize why that little structured, easy thing that they read about doesn't work. It's because that's that thing called emotion that gets sprinkled into the cake that could change the way it tastes. And you gotta manage yourself as much as you do the market. And you're good at that. I could tell the way you've articulated things to me through the years. It's just anyone who's good at trading, whether they know it or not, they manage themselves as much as they manage the trade, period. And they do it by default. They're good at it. Dave said, I don't know if you were there. I don't think you were because it was like in the first couple months. He said, if you guys aren't wrong a lot, you're fired. Because trading is about being wrong and being okay with it, getting the hell out, taking a shot. And what boss would say that, in a business? If you're not wrong a lot, you're fired. So those were, when you came, where did you sit? Did you sit in the garage that they called it?
Yeah, back in that makeshift, the garage, yep.
Why did they call it the garage?
It's just like it's almost like an extension of the regular office because they needed more seating. So I was in there. Well, one funny story. I was in there, and back in the day, we had these Trinitron like brick monitors that we could see the news flow. Like a 2-foot deep piece of plastic. And I shared a Bloomberg screen with this guy, and we had the unemployment number coming out. And back in that day, it was like you could maybe click in and make money on the unemployment number if it was like a certain way. But now, you just can't do that now. And so this guy next to me, we have all these numbers in a row on the Bloomberg. So there's like 10 numbers, but all you care about is the non-farm payrolls, which is sitting like somewhere in the middle of this list of 10 numbers. So this guy next to me, he puts this Post-it note, and he cuts them all up, and he cuts out just like the only number that we need to see. So it's kind of nice, so I can just see right away, the fourth number on the list is all I care about, so I can see that through like the cutout on the Post-it note. Well, he's sitting, and when he looks at the cutout, he sees 3 digits, but when I look at it from my angle, I only see 2 digits. So I remember like it's supposed to be like 212,000 or something, and I just see 12,000. Like, holy shit! I started selling a bunch of like DAX futures and some other stuff, and luckily the story doesn't end with the nightmare that it should, because the market rejected my order because of unreasonable like price reaching. Like I was trying to sell a market that was exploding higher, and it rejected my order. So this guy had covered the two. Well, he could see the 212, and I couldn't. So I thought it was 12, which is like the biggest possible miss it could have been. And that's the memory I have from that place in the garage. But yeah.
Garage. They call it a
You can't
garage.
even make that stuff up.
No, you can't. Well, the way the office is, it was just those 2 little offices. As he hired more people, he just kept knocking walls out in the building. They would do it, and it would open up into what the next office layout was. And then back there was nothing. And as he hired people, he filled it out. But that was like the biggest area. And then up front was where all the original or newer guys were, and it was but then you guys had meetings back. That's right. When you started, you were back there. They had mandatory meetings you had to go to, right?
Yep.
Every day after. And did I don't want to say his last name, but Bob M, did he host it? Was he the guy hosting it, or was that after you?
He was after. I know of him, but I think he was just like leaving to open up an office in Florida or something.
Right. So you didn't have to be under his tutelage, is my question.
No, I did not.
So you were lucky, because most guys didn't like him, I guess. I was beyond that, having to go back there, so I never did. But newer guys were mandatory. This might have been before you or whatever, and he was like a crack the whip kind of guy, and it was not the way to help and train people, from what guys would say. But anyhow, that was back in the day. How about in the S&Ps? Did you do anything in there today?
I did. I'm about even in there today, but I can tell you what I was looking at. It didn't necessarily, it kind of worked out, kind of not, but this just illustrates like the way I look at stuff, which is probably a little different, I guess. So you see, okay. So we had that massive rally on the open.
Mm-hmm.
You see that little head and shoulders type pattern that built itself around the high?
Up here, yeah.
Yeah, and see when it breaks the below, like 45s or so is kind of the low of that?
Right.
Yep. Okay, so my thinking was that, like, this is too easy. Like, it's too easy technically. And you could have made money on this, which some people might have. I didn't. I just watched it, and I'm thinking, if you sell that, at some point they're going to test you and get you out of those. I just feel like that's too obvious and too easy. After a big rally that caught people by surprise, to just top like that and be done for the day. So, and the 55s also was the level that it rallied to yesterday, I think, or the day before, whenever. So I was like, if you're short those, there's a good chance, and I still think that, well, today, who knows now, but I still think it's possible we can take those people out and test that level. So my thought process was, I'm looking for a spot at some point after that breaks to get long, because I feel like they have to go back through that 45 level and test everybody who sold on those technicals.
Right.
And I got beat up a few times doing that trade, and then I eventually caught that trade at like after 10 o'clock. I bought it in there at like 40 halves or something like that, somewhere in there. Yeah, and I caught that piece, but I had just making back my losers basically. So that was the way I looked at it. I was trying in there, yeah.
You were buying early, and then when you finally caught it, it was right in there.
So I felt like, looks like a nicer pattern down there from 9:50 to 10 o'clock. So, I'm using technical analysis kind of on both sides of this, but I'm trying to figure out like where people may be stuck and they think that, I think they should be tested, and then take those levels out and make people uncomfortable. It's a choppy day. It's not just going to rally and then have a head and shoulders and go down all day. It doesn't work that way. It's going to test them. So that was my thought. which ended up being right, but at the same time, like it wasn't. I needed to wait and execute it better, so I kind of jumped the gun a little bit, and then it turned into kind of a shit show now.
Yeah, now it's a midday garbage. Now,
Kind of a
what you were
mess.
saying, and this is the way you say it, is you're saying the same thing, not even in a much different way, but where guys are stuck is what we talk about, and I talk about to guys all the time. But this is really cool for people to understand how Brad just said it, of taking, like, these guys are short in here, and so they're not just going to get paid, go down forever and make new lows. That's what they hope, that's what they want, that's what they think. They're going to get tested. And this move back to the middle of this chop was the test and the squeeze. Life wasn't going to be good for everyone to sell it there and have it go through the lows, through yesterday's low, and look how good I am. And this test is what you played. Um, it just it tested a little later than you expected. Went a little deep.
Right, it went down a little more than it paid those people a lot more than I thought because after that surprise rally, I feel like you don't just get the surprise rally. You do some days. Okay, let me just rephrase this. If we hadn't broken out on a longer time frame, we could definitely have the surprise rally and then go through the lows all day. But since we're kind of more into our downtrend and everybody look at the media, look at the chart, everybody knows that we've been going down. When that's the case, with a huge rally on the open, reversing and going right through the lows, like after all the crap that we've seen the last 2 weeks, seems very unlikely to me on a head and shoulders pattern. It seems like they need to really test those people a lot more.
It's
So
too easy.
given like how much we've sold off, it's too easy. Too easy.
Yeah. And then they come back in. Now it's like, for me, it's like this is the fight, and they got to get out. They got to get out above 43 to test any of these swing highs, or get below. There's maybe some sell stops below 37 to take this out, and then maybe test down in here. But you're right in the middle of that crap. You got some.
Yeah, it's like the less powerful now. I feel like I like it more at the top, and then when it gets in the middle of the range, I just feel like it's just kind of garbage. And people could say, well, how do you trade on this stuff, like these opinions? And the answer is I trade it small because I'm just kind of playing technical games. I'm looking at where people might get caught and where I can get in. How can I make money? I think they need to be tested. This isn't like my favorite stuff in the world. That's why I'm not trading at large. I'm not as aggressive. So everything's different. Like if I have other variables at play, then I might be looking at this differently.
What's your setup that you like? I don't want to say your go-to setup. Something that's easy to identify for you.
Um, when everybody's leaning one way because of news or expectations, and then the market can't do what it's supposed to, and it makes people very befuddled that it's happening, and then you get technical patterns like forming that are bullish in the face of everything that almost like okay, here's the way I like to put it. The best trade on a number or on an event or on a day often is when a fairly intelligent trader thinks that it's really bullish for all these reasons. And then when that doesn't work, that's the best trade, is the other side of that. Like, I go into a lot of times I go into economic data and I'll say that this is like a really big, we have retail sales on Friday, which will be important. And then we have the Yellen testimony tomorrow. I'll look at like, what do I think is a surprise? And I'll trade in that direction, but if that doesn't work, if the market doesn't do what it's supposed to on a surprise, it's usually a very big move the other way. And a lot of times, like, you'll see the 10-year note do that, like on huge misses in unemployment or CPI. It'll go the opposite way the entire day. And when you see that happening, you can keep playing that trend all day long because people are caught. And those are my favorite days. If
Yeah,
that makes sense.
yeah, it does. And Dave taught me that in the first couple months of my career. He said, I don't know if he drew it on a piece of paper, and it wasn't like a big meeting he held. It was one of those things that you pick up. I'll draw it on my screen. He said, if a market goes from here all the way up here, it's strong. Pretty easy. If it comes down halfway, yeah, it still could be strong. But if it comes down and it takes away all the weakness in a very short period of time, how strong is it? Then it goes below where it started. How strong is it? Especially if it was, it ran for a reason, like a big number or a big event was bullish and it rallied, did what it was supposed to do, but then came all the way back and went through. You got to be bearish, unless something else changes. You got to play from the short side. the whole session. You usually
Right.
get good follow through, right? Trends and everything else. But he had said that and drew it on like a piece of paper. And he says that's the only reason why I like the fibs. He'll throw a fib up. He says I don't play it and buy 50%. I just want to see. I want to measure it and say, why the hell can't they even hold half the move? What's wrong?
Right.
You know?
And the other things that I totally agree with that. And I think Ben Bernanke was out in the media over the weekend, not this weekend, but last weekend, talking about negative interest rates or something the U.S. could do. And that was when we were having all the bond panic. That Japan did their negative interest rate stuff. And all I was thinking about Monday morning when I read that stuff over the weekend was, everybody is going to try to be buying pullbacks in the 10-year today, but look at the last 2 weeks. It's been rallying every day. So sure enough, it just went down all day, and then the next day it went back up. And I feel like a lot of this is people are off balance by popular media, and it's smart money either planting these headlines at the right time or using them to get out. If you're already long, why not use that kind of stuff to get out? That's what I would do. Get out of that shit when everybody else wants to buy it because of an article on Sunday night by a former Fed chairman. It doesn't even matter. So
Right.
I feel like there's a lot of that stuff going on, and the way you can use it to trade is just at key times, a few times a month. When you find yourself reading a lot of stuff like that, just take a look at the market and see, like, what does everybody think? And have we already had a big move in the direction of these stories? If the answer is yes, it's probably old news. I'd be really careful. Maybe it just saves you money not being like a sucker and getting caught up in that.
Well, yeah, it's old news. It's already baked in, and so they're going to use that to get the if they're already long, they're going to use that to create the buying to sell into. Smart money who's long from below. It's baked in, but that's great for that's like a real time. I mean, like a real useful tip for guys, because everybody reads, especially with how easy it is to access news. Something you don't dig for it. If something just keeps hitting the headlines, and you're like, well, yeah, that's pretty bullish for that stock or this index. But we already rallied. It might be the best short, potential for that day, for that particular week or whatever. And it's not random why it worked. It's the opposite that normally is going to work. Create better locations. How do you, what's the best advice you would give to, because I get asked this and it's a very subjective question. It's hard to answer because a lot of variables exist. But what's a good sweet spot loser for the E-minis, would you say?
Yeah,
Ticks
I think
wise. Go ahead.
I think it changes depending on the market. 100% changes. That's why it's hard to answer. It changes based on my size too. So I always look at my last 20 days, average 20 days, and kind of see what my average winning, average losing day is. And I kind of keep my losing days, like I don't want it to be a bad losing day. I don't want it to be much more than, 1.5 times an average winning day or something like that. And maybe less, but generally speaking. So when I'm trading in this kind of market, I feel like I want to give it like, 2 to 4 handles with small size sometimes, which is pretty wide. Maybe more like 2.5 handles, which would be 10 ticks. And sometimes in other markets, when it's slower, it'll be 2 or 3 ticks only. So I think on average in my career, it's probably like 4 or 5 ticks is where I like to be wrong. But right now, I'm definitely making that bigger right now and trading it smaller to compensate for the volatility. But when it's really thick and slow moving, 2 or 3 ticks is a lot. So that I'll be
Right.
trading maybe bigger and taking. So right now it's bigger than it's been in a long time because of the volatility. So if I'm risking 2 or 3 handles, I want to make 8 to 10, and maybe to 4 is a little much. It depends how much you're going for on the other side, but definitely I want to be able to sit through a little bit of stuff and then pick my area. And maybe, and I'm not a fan of like averaging the losers, but one thing I will do in this is if I'm bullish, I might work an area. Like I might buy one at 3 different handles. Say I want to buy 3 contracts. I buy one, and one, and then that's it. And then I put my stop in or whatever. Because I don't know exactly where I want to get in, but I like a certain area. So I'll do that more when it's like this, on my exits and on my entries. So I am in theory adding to a loser, I guess sometimes, but it's with such small size that it's part of my overall idea. So it's different than just like getting frustrated and adding to a loser. There's a difference. So that's something I'll do when it's like this. So hopefully that kind of answers it.
No, it does. What would you say is I'm going to ask you this. I know the answers, and if you don't want to answer, you don't have to answer. What's the average size of your career you've put on?
Oh, it's so variable. I mean, it can be so. I mean, when I mean, I was trading. I've traded. Oh boy, I would say, okay, let's just put it this way. Average size in my whole career, 30, 40. I've had years where I trade a lot of two, three, 400s, and I've had years like right now I'm trading like 4, 8, 12, 16. Like, so, I mean, that just shows you like I'm trading smaller right now than I've traded in many years because I'm not trading as effectively in this. It's very whippy and tons of opportunity, but I feel like I'm just a little sloppy and I'm not quite able to get out as easy when I'm wrong. Slippage is high, and it's not really like in my wheelhouse. Like I haven't really found the stuff that I like as much as usually I do when it's busy. So I'm kind of just staying small because that way I can hang with stuff a little bit longer and I can take a little extra heat if I want. I can ride stuff a little longer because I'm so small for my account size.
Now, when it
So
gets in your wheelhouse, you'll ratchet back up and just adjust your size accordingly.
yeah, right. Usually in the past when it's busy, I actually trade much bigger because I feel like I make more money and I'm right. But this time I've been smaller when it's busy because I felt like it's for my style. It hasn't been as clean as I got. You know, you get caught real. Like I've had a lot of times the last few months where I've had like a couple good days and all of a sudden the third day I lose everything I've made and I'm just like it happens so fast. It's so busy and I'm not really. That's happened to me too many times. So I'm kind of just really working on the risk management and the smaller size. And all it takes is like one, like the way I trade is I'm kind of strange in terms of like I've never been a good grinder. Like I'll have a day every quarter that is bigger than my whole quarter sometimes. Like I'll see something I like and I'll ride it and I'll trade it larger. That's how I develop my style. So if I'm trading small and staying in the game, I'm okay with it because I know that I can always have something big fall into my lap. And it usually happens when I'm never looking for it. So I just got to kind of show up, do my homework, and then sometimes they're there, sometimes they're not.
And that's the thing about trading, whatever size is, it always changes. There'll be 6 months where you're always in and out with 200, and there'll be months where you're not. It's just always fits. So when people would ask and they think someone trades a certain size, they always trade that size. It's furthest
No,
from the
no
truth.
way. I mean, look at the book right now too. You can't even move around. I mean, even if you're trading, it's really punishing if you're wrong right now. It's so thin, and it's hard to move that size around right now unless you really know what you're doing. So I feel like that's
Even
it's
40 or 50 would be hard to move around if you're
very hard
stuck
to
with
move
someone
around.
else.
So painful. Yeah, the losses can be, you're down 10, 20 grand within a half hour, no problem with that size.
No, how about the Euro stocks? Why haven't you traded more Euro stocks throughout your career?
I do actually. I love the Euro stocks. That's probably one of my favorite products. I trade that. I'm having more success in there than the S&P this year because you use that with the S&P to make a little bit of a relationship with the two, the Euro stocks, S&Ps. I love the Euro stocks. It's thicker too, a little slower moving, and I feel like you can move around with less damage too in there. I like that product.
Dan trades Euro stocks, right? Is that his main
I think so.
market?
Yep.
You still talk to him?
Yep.
Yeah, I thought he was or I think he was always a Euro stocks trader throughout his career. What did they have you start on when you started? What was your first market?
I was the first guy they ever hired to trade equity index futures, so I was just kind of on my own. I traded the DAX to start.
No, we were trading. You mean U.S. equity indexes?
Well, they told me when they hired me that the whole firm was basically trading fixed income, so they're starting an equity department. So I was kind of the guy who was just always trading equities. That's
They
why I got pitched.
they didn't lie to you. Here's what happened.
That's what they told me.
No, they weren't wrong. What happened is a lot of people. We had 6 or 7 of us. Danny Sheck was one of them. Woj was one of them. I was one of them, and we were trading DAX Euro stocks, FTSE. I was trading Euro stocks DAX. But then the interest rates got to be so busy, we just started trading interest rates. Why would you trade, equities when you can make 3 times in the bond or even the bonds because the Board of Trade came online? So the office, because they would let you trade what you wanted, if you were making money and, whatever. So the whole office kind of swarmed and turned into being just interest rates.
I
So
see.
and it was because of the Fed, the recession we were going into, then 9/11. They were doing surprise rate cuts and everything else. Um, so they wanted to bolster up their equities again because all the money was made in interest rates. And then guess what? There was a lot of opportunity in equities. We kind of go
Well, yeah,
back and
they wanted
forth.
to diversify the firm, it sounds like.
Yeah, right. But then there was more opportunity. It like bounces around. Like the first year I started, all the interest rate guys were making less money than equity index guys. The best equity trader was not me my first year, obviously. It was Paul. Remember Paul?
Yep.
And Paul was he was the best DAX Eurostocks trader in the firm and had one of the best years of anyone, including interest rate guys. But then that changed in like oh mid '01 or '02, and I made the switch late, and that pissed me off because it was like left a lot of money on the table. Still, because I was still making money grinding it out in the Euro stocks, and then I said I got to trade this, Boone and 30 year. My income went up exponential. I was actually mad because I was like, why didn't I do this 8 months ago? You dummy. But then it just moves, and then oil got busy, gold. Those are thinner markets. If you're not a huge trader, you wouldn't trade it. But those were markets that moved a lot. Um, Remember the nat gas?
Yeah, I never did trade that, but I know it's pretty wild back
Yeah,
then.
I didn't either. But it was $75 a tick, 20 ticks apart,
Yeah,
$50, $50 a round turn.
if you got an extra bottle of Malox at your desk, you might as well give it a try. Get the DAX and natural gas up.
Now you're getting out if you got 3 or 4 on, and you're wrong.
Yeah,
Good luck. But there were a couple guys that traded that pretty decently.
I'm sure.
They had a couple head starts in their, a couple helpers, things like that, and good relationships. But you know, that's the way it goes. But hey, listen, I thought this was great, man. It wasn't like an interview. It was like good stuff, and some was reinforcement, and some was like good news stuff that gives guys, because everybody I think should have a helicopter and a ground game, right? So I mean, just to close, what would you tell guys? If you were to someone that were to come to you, and it's like some guys in this room are making money, some aren't, some are on their way, right? And everything in the middle. But what would you tell guys that, let's say, what would you tell them?
In terms of how to grow or how to
Yeah,
get through the
in this business, what would you tell them? What would you say about just growing and staying on top of it?
um, cultivate the ability to be a learner and constantly be looking for ways that you can get better. But at the same time, don't get away from like your true skill set and what you know that you enjoy and you're good at. If you're analytical, it might be something like that. If you're very visual, it might be a technical approach. Really understand what you're good at, and then also understand what's been working for people in the market, so you can kind of set your expectations accordingly. I think the other thing is if you keep managing risk, you'll survive and you'll eventually stumble into a way to make money. So it's protecting that downside, because you're just going to have days that it doesn't seem fair, but you're wrong and you lose money. And we all go through that. And it's just, everybody says this, but just because it's true, is figuring out a way. If it's putting in stops manually, if it's having someone who calls you, or having a clearing firm who shuts you down, brokerage that shuts you down when you're at a certain amount of money in a day, I would take drastic measures to make sure that you protect yourself in that way, because it's not even about it's the opportunity cost. If you get buried really bad, it's hard to get out of bed the next day. It's hard to take advantage of a busy day like 2 or 3 days later, because you're so messed up from what you did to yourself. So that's like, and it's also, if you have a family, you have wife, kids, or other duties, it's really hard to live that way. It's hard to go home at night and have any energy to spend with anyone else when you hurt yourself like that during the day. So really be careful to manage that energy. And sometimes you need a day off. You need to go and just enjoy life and remember that this is just a game, and someday we're all going to be old and we're going to die, and we're not going to take it with us, and it's really not made to be so serious. And I think all those things helped me not get so buried in it. And that was hard for me when I was younger, but I've been better about that, and just put it in perspective.
No, that's well said, Brad. I appreciate you coming. He's got to go now. Maybe in a couple months or something, you could come back and talk about
Sure.
some of the same stuff, man, because
Yeah.
it was really good, and guys in the platform are thanking you and everything else. And so
Yeah,
um,
you're welcome.
I appreciate it. I'll stay in touch with you um, like usual, and then we'll just take it, month to month and see what you're up to and if you want to jump back in. But thanks again.
Sounds good. You're welcome. Have good luck, everyone. Thank you.
All right, Brad.
Bye.
Thanks, man. All right, Brad. I muted you, so you're off there. You could jump out of the room or stick around, whatever you want. I'm not going to run much longer, other than just we're going to approach. There's a big bid, 1,000 lot. Again, it doesn't really matter that he's there. What does matter is that when they take him out, there's probably sell stops below, only because we came down in here twice. It was the bottom before they retested all those shorts that Brad talked about. But now it's like the ice is cracking. You got a lot of nervous longs, and they have a chance. It's midday stuff, volume's a little light. They have a chance to run sell stops below 35. And oil has been weak all session. All this rallying and everything the S has done, oil hasn't really participated and followed it to the upside like it normally would. We talked about that earlier. You had higher highs in the S&Ps, and crude wasn't even close, and the downside happened to be the right side. So be careful with that. What's your guys' questions? Let's save them, and if I talk to Brad in between there, I'll try to ask him. There's a couple good ones. He just had to run, I know, after an hour, but it was a great session, so I'm glad you guys liked it.